You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Hello, everyone, and welcome to the mortgage edition of the Big Cast. My name is John Best. I am the CEO of Best Innovation Group. We like to do cool things for credit unions. You can check us out at big-fintech.com. I've been doing this a long time, but I couldn't have done it all this time. It's been years, literally, without the one, the only, the man, the legend, Glenn Sarvati. Hey, Glenn.
Hey there, it has been years and it's kind of amazing.
And it wouldn't have happened without you, buddy.
Oh, thank you. I was going through my directory recently. I'm like, oh my gosh, we've been doing this for this long. Time to start clearing out some archives.
Yeah, we got stuff going back to when you were talking about, replacing mainframes and how you hated those knuckle busters. Yeah, it was all pre-digital when we started. There was the credit cards were just little pieces of paper.
We actually just kind of stood in the town square on milk crates and kind of
with a bell, just a big bell right under the clock tower. Anyways, we're here to talk about mortgages. Did you hear what happened with mortgages?
This was your idea, and you've got an added kind of dog in the hunt, as they say, because you sold a house not that long ago, and I guess that's why you probably picked up on this a little bit faster than I did. But interesting topic.
Yeah, the reason I picked up on it is just a shout out. I am an avid listener of The Daily, which is the New York Times podcast. They had just a whole episode. I had no idea this was going on. So I'll kind of give you the thumbnail.
Yeah.
So apparently there's some dudes out in Missouri, and they're not anybody special. They're not like super lawyers. They're just some guys, and they wanted to sell, they were selling some property. And they noticed that when they went to sell the property, that you had to fill out a form, and the form is a boilerplate form, I believe, and there's a lot of realtors out there who might correct me, but a boilerplate form, I believe, is from the NAR. And the NAR is the National Association of Real Estate
as opposed to the NRA.
Right, which is the National Association of Armed Real Estate Agents.
I was going to say, because the NAR, I guess, according to the suit, was actually holding you up at gunpoint too, from what.
Yeah, exactly. Well, and so, year after year, startup real estate companies that offered, lower commission-based businesses just went out of business, and no one would ever buy them. And the reason they wouldn't buy them, as it turns out, is you got to sort of be blessed by the NAR to get in sort of this funnel of how things get sold here in America, which means putting it on
the multi-listing service and all that good
stuff.
Yeah,
the MLS system. Yeah, you gotta do that. You gotta also have sort of this commissions exchange sort of thing happening. So what these guys noticed was on their contract, basically your choices were 5%, 6%, 7%, and 8%. Like that's, or 6%, 7%, and 8% or something. And he's like, well, why isn't there a lower choice? I don't understand. So anyways, these guys got kind of upset about it, and they went and conducted a lawsuit, a really big one, against the NAR and, the mortgage industry as a whole. And out in Missouri, nobody special, just a guy who said, I just want to do things right. And he wasn't like a super lawyer. And I think his name was Burnett. And he managed to win. And it triggered an avalanche of lawsuits in every state who was watching this. And so the interestingly enough, one of the big issues was this whole 6% with 3% going to so when you buy a house, do you know how this process? You ever buy a home?
Do, and I remember.
I thought you lived in a box.
That 6% has been kind of just gospel for forever.
Right. It's it's part of what's in there.
And I know that then you got the buyer's agent and the seller's agent, and they both get their take out of it, and it all works smoothly because we've been doing it the same way, but I don't think anybody spends a lot of time questioning whether that's the best way to do it either.
Right. And so and so what happens is because of the MLS, you find the property, you talk to the other realtor, right? So you're selling and then somebody's buying. And, and I just went through this process. We just sold a home here in Colorado Springs. Now, I'm going to talk about both sides of this because I happen to have a very different experience with my realtor, but
As
we'll
a
get
seller,
there.
as a seller.
As a seller. So, and as a buyer, she's been our person for a long time. So
Oh, okay.
I'm gonna talk about that, but I think I understand how it fits in. And so the
But just to cut to the chase a bit, what we're thinking that we want to kind of get into on this is the new world could really dramatically alter the way financial institutions, credit unions in particular, might be dealing with the world of mortgages, right?
right, because there was so much sort of interplay. Like for example, Glenn, if you're a real estate agent trying to sell a home, are you going to show the houses that give you either little to no commission on the MLS, on your side, that doesn't have the split for the seller? You wouldn't show that, right? Because it wouldn't meet the minimum commission. So if you had a house and you were just trying to sell it yourself, that's not going to work.
That's the, I mean, it's going on forever. For sale by
And
owner, call my phone
right,
number. Yeah.
right. And what's interesting about it is they related it back in this daily, which we'll have to get a link to. I'll send it to
Yeah.
you. But in this podcast, they related it back to the old days of, and it's funny because my wife used to work for a travel agent of travel agents.
Yeah.
There was a time when you couldn't book.
My father
Yeah.
ran a travel agency. That's just, that's the way it worked until the mid-70s.
Yeah. And so if you wanted to get tickets, you couldn't just call the air. I mean, you could go down to the airport and that might be fun, but if you were planning travel, it was very technical. You had to get connected to this inner system, and there was all these different things, kind of like almost like dealers on the back end, the dealer trade systems that move cars back and forth and deal with that, which maybe that's next, who knows? They likened it to that.
Elon Musk has kind of gone after that already, the distribution model.
Right. So what does that mean? Well, it means that so they win this lawsuit and it causes an avalanche about this and the whole entire country, and they wind up rolling it into a big class action lawsuit.
People who have sold houses, because it's always the seller who has actually paid that piece of it. So
right,
that's the point that you're making is you're due a check because you theoretically overpaid on the commission for selling your house, right?
But yeah, and so let me speak to that a little bit. Okay. So first of all, our agent, so I'm a little biased. She's a family friend. We've known her forever. She's helped us buy 3 homes and sell the one we had. And interestingly with her, and I think that it's not so much, here's my thinking. It's not so much that that you're not going to pay the 5 and 6%. You can do that. What they're trying to say is that there was no competition. Like, I happen to have a really incredible real estate agent who I believe was worth, what we put into it. And she, she pointed out things. She dealt with the closing. So I'll give you an example. When we bought our second home here in Colorado Springs, on the MLS listing, it said it had air. It basically said it had, air conditioning. And so that was a criteria for us. We're from Florida. We don't go anywhere without air conditioning. We just say you can kind of do it here in Colorado, but it's just not us. So we go out, we see the unit, we get to the point where we sign the contract, and she realizes that no, that's not the air conditioner. That's just the heat pump. There is no air conditioner. But she found that, not us. And then she goes back to the contract people and goes, listen, you have to make this right. You did, you had it listed here and now it's not on there. I realize it's an oversight. And the seller paid for air conditioning to be put in because she noticed it.
Did they put it in, or did they give you the amount so you could put it in? Just out of curiosity.
They put it in, and it was fine. It was fine for the entire time we lived there. It's probably still fine right now. And but that was because of her, because she knew the rules. She looked through everything. She went by the house without us to make sure it all set up. But that's who this lady is. She's an incredible, real estate agent and does a good job. When we sold our house, there were
It's interesting too, based on what you're saying, because again, family friend, and I'm not saying that real estate agents don't look out for you, but the thing that's always tricky is if you read the fine print, they actually work for the seller. Even the agent
Yes.
representing the buyer is paid for by the seller. And they really, I mean, it's kind of that fiduciary responsibility thing. I don't think they really have any specific contractual obligation to the buyer because they want to get the highest amount of money because the more that they can, sell the house for, the more they're going to get too. Now, again, when you're a family friend, when you got repeat business, that, there's obviously calculus beyond just, maximize every transaction. But, that's to me, that's I think part of what goes on here is that distinction between the buying and selling agent.
Yeah, and it's just always been that way. And my feeling is that there are plenty of agents like my agent, who's incredible, who bring value. And then there are other agents who don't bring as much of a value. So,
think about the person. I mean, when you think about the person doing the work, you gotta get the listing. So you gotta, you're hunting for the listing on the side. And then really, I mean, tell me if I'm wrong. I mean, because you just sold a house. How much, I mean, I guess the agent, can provide expertise to tell you what you need to fix up, to tell you how much the house is worth. But
oh yeah,
it seems to me that there's a lot more work that goes into being the buying side agent than the selling side agent. And if anything, the seller usually gets the bigger percentage, right?
yeah, true. But I would say too, I don't know. I would argue that it's especially in the market we were in. Well, the market we were in, we sold ours the same day we put it on the
That's a good point.
market.
Buyers and sellers markets probably alter how much hustling each
Yeah.
side of them have to do. That's a good point.
You're right. Yeah. So I think that's a big part of it. But so let's get back to this lawsuit. So the Missouri lawsuit was October 2023. The jury in Kansas City ruled in favor of the plaintiffs, agreeing that the NAR and these major brokerages like Home Services of America and Keller Williams colluded, hear the word there, colluded to artificially inflate commission rates.
Yep.
Wow. The jury ordered the NAR and the brokerages to pay, are you ready? $1.78 billion in damages, which could potentially triple to $5.36 billion after what they call treble damages.
Right, because if it's seen as a true antitrust case, exactly.
Right. So the judge overseeing the case still needs to issue the final judgment, which I think he is getting ready to, which would ban the cooperative conversation rule nationally on multiple listing services, which is the MLS. So NAR, Keller Williams, Home Services have all stated they will appeal the jury's verdict. But then it rolled into the nationwide settlements. All of a sudden, you've got people going after Anywhere, Remax, more Keller Williams. And they're all following the same, basic playbook as Burnett versus the NAR in Missouri. So then what ends up happening is that there's so many of them, they hit so hard that the NAR and all of these guys get together and they say, you know what, we're just going to do like a class action. We're going to pay everyone and we're sorry for what we did. Please don't hurt us.
I'm trying to figure out where that money is going to come from because they've already paid out all the individual real estate brokers.
I assume they're going to go take the homes from all the real estate agents and sell them.
I mean, which
I'm against.
Where it's the typical kind of deep pocket thing, but the money isn't all sitting in a bank account at Keller Williams. They've paid it all out to these folks. I can't imagine them going, oh, by the way, could you give me back 1% of your commission you got last year? I just have a hard time picturing that happening.
I don't know how that works.
It's interesting that there's that much money sitting around to be had.
So the NAR said, okay, you got us. We're going to change the MLS system, the multiple listing system, so it doesn't exclude listings based on the commission anymore. So that way, everybody sees all the listings and it's not going to just be those who could afford a good real estate agent or had that deal. And that's where the class action lawsuit went to, right? And
I'm also hearing that it does something even beyond that it actually kind of decouples the buyer and the seller.
Yes.
So that's where I think kind of hey, we've always done it this way and it's nice and smooth. I'm sure we're going to find a better way, especially with technology these days. We'll find a way to do it, but there's going to be some turmoil in the interim before we get a new system in place.
Yeah, and that's kind of where we're at. So, who's gonna benefit from this? I think first time home buyers with, not as much money to put down. That's gonna be good.
Yes and
Uh,
no. Yes and no, because I've actually seen another take on that too.
mhm.
I mean, in theory, it's going to bring the price of housing down a bit, because if the seller had to pay the commission, it's a little bit like the interchange conversation, right? Well, if I got to pay you 6%, I'm going to try to charge 6% more for the damn house.
Right, right. It
So
always goes somewhere, like you
so
said. Yeah.
that will, in theory, it'll bring the price of the house down. But here's the part that is really kind of interesting to me. And again, unless we change the rules or something, the price of that commission has always been baked into the mortgage balance that you borrow.
Right.
And
Unless you're the seller, in which case it comes out of your dividends.
right. But I mean, but there's cash in theory, there's cash coming in. So they just take their cut before they hand you the check.
Yes,
But
yeah,
I'm
it's always
thinking,
in the disclosure.
but from the buyer standpoint, I'm thinking again, when you talked about first time home buyers, I'm thinking, okay, well, if they suddenly have to fund the buyer's commission, the buying agent's commission, that doesn't necessarily show up in the mortgage anymore unless we alter the way we do mortgages. So that could easily be several $1,000s more that they have to pay upfront at closing. That's challenging for a first-time home buyer.
I agree. And
so maybe we just change the rules and say, yeah, great, we'll just throw that into the mortgage as well. We'll write the buyer a check on the spot so that they can actually pay their real estate agent, and it's almost like a home equity loan on the day that you bought the house or something like that.
Well, we used to do things like that to avoid PMI, where
right.
we would split some of the home into a second because of the rules around jumbos. And so, and those are from state to state. But I think ultimately, well, one, the NAR has to figure out what it's going to do now, like who it is, like what's its purpose, because its purpose was sort of to hold the line on these commissions and to get the MLS and to create the basically the guardrails and the flow and process that led to sort of what we have now.
Well, there's still clearly a need for an MLS, so they can be the operator of that. But it's
but the overall, do you really need an MLS if you've got Redfin and Zillow and Realtor? I mean, it's the same thing. We go back to the travel stuff. There's Expedia. I get that, but Expedia is not like, I mean, there's value in something like Expedia because it goes out to all the different airlines and tries to find, and it'll do things like, hey, you could take this hop on American Airlines and then take this hop on, a different airline, which obviously American Airlines or somebody's never going to do. I don't disagree with that, but I don't know if there's value in having sort of this one centralized sort of thing, which is kind of what's always been out there, that Zillow and Redfin and Realtor and all these guys hooked to. It could be that becomes a democratized process where there's a new sheriff in town, the Expedia of homes, that says, hey, I looked at Realtor, I looked at Redfin. And I think now this is interesting. I wanted to share this little story with you. You might remember this. A long time ago, I ran into this guy in Texas, and I can't remember his name. I was looking for it before this, but
nothing ever good comes of running into guys in Texas. Go ahead.
This did. And he had an innovation, and his innovation was that he realized that the number one factor in selling your home or buying your home in terms of succeeding with regard to how much you want for it or how much you're looking to pay or in the right area or the schools is indeed the realtor. So he used the MLS system and basically pulled down all the realtors and used an algorithm. This was way back in 2017, maybe 15, 16, somewhere in there. And he used an algorithm, and basically you put your address in and it would say, based on the style of house you have and where it's located, these three realtors, are the best. They're the ones that get the best deals. They're the ones who sell the most. And what's funny is it turned out that location, you always hear that location, was a big deal because like a realtor, like a particular realtor might be really good at selling in this neighborhood in this area, but like two neighborhoods over or a block or two over, not so good. This other realtor's better. And it could be because they understood the area or I don't know, but they kind of
I
came back.
definitely see that here. I mean, they even market themselves that way. So
Right.
that rings true. Yeah.
Okay. So where I'm going with this is I see this is now sort of being broken apart like a monopoly. Like, hey, okay, well, realtors are going to want to sign up with some sort of. I still think this guy's thing was the right way to go, but you know what I ran into? I
Hmm.
went to show at the credit unions, and they said, well, how does it work? I said, well, you put in your address, and it's going to show you the top real estate agents to sell your stuff. And they said, oh, that's perfect. So will we work with this guy, George? Will George show up in there? I said, if George is the right guy, for that particular thing, if the algorithm comes back and says George is the right guy, absolutely. Well, what if George isn't the right
We
guy?
like George. Yeah.
Exactly. And so it got shot down time and time again. I don't know ever what happened with it, but I thought it was a brilliant program. But I think it's part of that same reality of there was a comfort level of the business, and it was like they couldn't get their mind around that this was something that, you should open up so that the members get the best deal.
Well, here
In their
we're back
mind.
to that disruption point again. I mean, yeah, people have to get comfortable with another way. And I'm also hearing the way you kind of described that maybe an Expedia of real estate shows up.
Yes, that's right. Yes. I think
I
that
don't disagree with that, but if I'm hearing that correctly, what it basically says is kind of like what happened with the telephone companies or something. We're going to disaggregate them all and break up the monopoly, and then we're going to bundle them back together again. I mean,
I prefer to
that's
think of
kind
it
of what
as
happened, right?
right. I prefer to think of it as disambiguation
Okay.
because I think that's more what's going on. Think about like my son Ryan, who we've talked to on this show before, trying to figure out a mortgage, that is at that age. And what are we hearing constantly during this election cycle? That the millennials are stuck.
Yep.
They can't buy a home. And it's because they weren't, they aren't able to sort of break into this club that we have where you have to have, it's kind of like credit, right? You have to have credit to get credit. There isn't sort of a way to sort of break in, that was there before. And it's caused, a lot of issues amongst the millennials who sort of want to, take that next life cycle step, that life milestone of getting a home.
But that
So
also comes back to something else that you and I talked about a bit before we started recording is I think people start to take for granted, particularly on the buyer's agent side, just how much work they do in terms of getting the paperwork all lined up, not only for the benefit of the buyer, but for the lender. And if that isn't going to be compensated the same way, does that fall on the credit union? Who's going to be doing the heavy lifting to make sure? I mean, as opposed to getting a relatively tidy packet because you got somebody who knows the process, who had a strong financial incentive to get it absolutely kind of ticked and tied before they brought it to the bank or the credit union.
Well, that comes back to the title companies, right? And so now you've got this other element of it. Look at First American. I mean, you ever been by First American's headquarters out right behind John Wayne or Santa Ana Airport out in California?
I didn't even know they were based there.
Oh, it looks. I at first I thought it was a sheik's home, like a Saudi Arabian sheik's place, because there's gold on top of one of the buildings.
There is gold in them, there are titles.
Yeah, and the title is good money, man. And the reason it's good money is because that can come back to bite you if you don't have your property title right, particularly if you're in the middle of the country or even in California where there's Mello-Roos and all these other things. It's a complex process. So I think your point is well taken. And that's why I wanted to point out that like I had a good experience with my realtor. And I feel like, you know what? I'm okay with her commission on it. I think that, she deserved it because I don't think we would have gotten out of it what we wanted. I think she earned her money, but I think that there needs to be competition because not everybody can afford. It's like lawyers, right? You know, some people can afford, you know, the fanciest lawyer there is, and some people can only afford the public service person or whatever. And as
It's such a weird market though, because I mean, the example you give, I mean, repeat business. You bought this. You said you've used this agent for three at family friends. You had a good referral, but it was also
Mhm.
three houses. Now, I don't know what percentage of people do this, but you know, there's a pretty good percentage of people who are buying, well, it's a first house. If they don't have somebody in the family who's already done the process, like you say, that can show them the ropes, you know, who they're going to get a referral from. But how often are you moving into a new city where you don't know the real estate agents? So other than pure price competition, and it's not something that you continue to do over and over again so you get experience, how do you figure out the right one to hire?
Yeah, I don't know. And I think that's where people would have said the same thing about travel agents. I'm
True.
sure they were
But
like,
you do buy
and you know
tickets
what?
over and over again. I mean, you do,
And you know what?
it's a
It did
repeat
happen.
process.
It did happen to people. Like I can remember, you know, when it first started, you know, there's all these jokes, you know, you look at like the original ones, like you should have used Expedia or whatever, and like it's like Captain Obvious, and they're in like a horrible place where, you know, the brochure was amazing, but it's like, oh, there's a big fountain. It turns out it's like a hose connected with
Yep.
some duct tape to a pole, you know, stuff like that. I think that this is going to have similar sort of things that need to be worked out, but the process itself does, you know, it's our. I think that one of the things that, if I remember right, struck me from the Burnett case was, so, you know, what is Redfin and Zillow for, if not for sort of being the, you know, think of like jobs. You remember, you know, ZipRecruiter, Indeed, remember Monster?
Yep.
You know, how did you used to find a job before? Well, you'd have to go and look at all the companies yourself, find the yellow pages, walk around, either drop off your resumes or find out their addresses and put them in an envelope and send them to them. And all of a sudden now and here's where I'm going to take this is, do you know how complex the resume process has gotten?
Well, I know the sheer volume that people have to sort through and the keyword searches and all that kind of fun stuff.
Well, but there's more to it than that these days. So, for example, a resume needs to be, well, they have a name for it, machine readable.
Yes.
And the way that they talk about machine readable is that there's a format for it. I want to say it starts with an A, but the reason they want that is because now what's happening is sites like Indeed and ZipRecruiter are using AI to parse through those things, and if you haven't made your resume in a way that it can be read, it's almost like being on the MLS listings without an agent. You know, there's no other, if there is no commission coming the other way, you're not going to get seen. But the bottom line is that I believe that there is technology to sort of help you get past things like the air conditioning issue that I had or whatever, and that it's good. But it would ATS, that's the name of it, ATS friendly resume. That's what they call it. I think it stands for the applicant tracking systems. That's what it is. So I think that homes are going to have to be put in a, I don't know, I'll call it MTS, mortgage tracking systems
Well,
format.
it's fascinating to think about. I mean, again, just market segmentation. It is a huge purchase. It is an infrequent purchase. You don't feel confident in it. Like you say, you got that whole fear, uncertainty, and doubt, like a commercial for a bad, you know, Airbnb or something like that. So there's going to be a certain percentage of the population that's going to say, yes, it is worth X percent to me to get that comfort level that I've got somebody else looking out for me. And then you've got the other pure price hunters who are going to try to take it as low as possible. So yeah, and like you say, there's going to be a lot of dust and smoke in the near term until we kind of let the whole thing resolve itself. And what I kind of keep coming back to is, what do the credit unions do to equip themselves, you know, hopefully optimize that, you know, and don't get disadvantaged by this, and hopefully maybe get advantage to it.
Yeah. And so that was where I had this discussion with Kevin Johnson of Suncoast. And he says there, you know, he's been looking at the market in Florida, and he's got folks who are deeply sort of embedded in that, and they expect it to get hot. Because this opens the door. maybe for the millennials, maybe for a lot of folks that were struggling to sort of, it's always kind of that American dream, right? You hear, oh, I want a house, a car, two kids, that whole thing, dog, cat. But I do believe that, there are a lot of folks who see that this could open the door. I also think it leaves a vacuum for someone to fill kind of in that Expedia role. And I wouldn't be surprised to see, like, for example, remember Redfin taking advantage of, right at the right time, they suddenly had 360 walkthroughs that you could do for a house during the pandemic. And, because you couldn't go see houses in the early parts of the
I didn't
pandemic.
remember. I did not remember that. That's an interesting point. Yeah.
And it was the right technology at the right time that played out good for them. And I'm just wondering if some of these smart technology companies like Zillow or these guys or some other company we don't know about is out there going, okay, today's the day. We knew this would come. Or my buddy who was doing the realtor thing. So I think that, go ahead.
No, you go ahead. Sorry.
I think that it's too early to tell what the impact's going to be, but I don't think there's any part of it that will be negative.
That's interesting. I agree. It sounds like you're thinking of it much more, fairly, so for, the younger generation, the first-time home buyers. I definitely see that it will generate more activity in the housing market. The question in my mind is, how does it alter the approach in terms of the pipeline of incoming borrowing into different forms of lenders? I mean, historically, like you said, the George example you gave, the credit union had George, and they had a pretty good sense that if George was the one who was selling the house, there was a pretty good chance he was going to route that business over to the credit union. Well, if George ain't in the mix, who's going to be the one? I mean, obviously Redfin and folks like that, they can put the thumb on the scale too. How does the credit union assure itself that it's still first in line or at least in the mix for consideration for that loan? That's the piece that it's upending a lot of that whole sourcing process that I'm trying to sort through. I mean, if there's just more houses being sold, then great, maybe the rising tide lifts all boats, but it may also shift the market share too.
Well, I think also that unfortunately, we won't know the true effects of this for some time because I think you have to go through a cycle of selling and buying.
Good point. Good point.
To really see how this plays out. You need to see, okay, what's the buying process look like? And that's really not going to show you everything until that person goes to sell that same place. And then you find out what was missed, what wasn't missed, what's real and what's not. But I think you bring up a very good point about George. Presumably, George will there. So I mentioned this. I was having this discussion with a buddy of mine who is in the real estate business. I'm not going to say his name, but we were having breakfast the other day.
It wasn't George?
He said not George. He said this is going to kill off and he had a name for it. He called it sucker mom real estate agents.
Yeah, I know what you mean. I mean, yeah, the vast number. I mean, when you look at the numbers of people who are quote unquote real estate brokers, it's that 80-20 rule on steroids. There's all these people who are literally not even making poverty level income, but they have that on their business card. I think that's what you're saying, right?
Yeah, and so because all they got to do is find a good selling agent or find a buyer, and then they get 3%. And really, for the selling agent, they just got to show up and show some homes.
Which was my point about the selling piece. Yeah, it's the hobbyists are going to get, and which is usually what happens in a downturn in a housing.
Yeah, and I want to say that it's not. I didn't like his saying there. I think it's amateur. We'll call them amateur real estate because I've seen plenty of men in that situation as well, where they do that. They're also usually like what's the guy that you can bring it to and have it signed and you can
notary.
Yeah, notary services and like 4 other things, which makes, you can make a living doing that. But I don't know anymore because I do think that there was, this was sort of balanced in a way that if you could just go past this test and get in this loop, you were guaranteed to sort of, all you had to do is hang a shingle and try a little bit and you could probably close a little extra dough, nothing that's going to bring everybody home.
It was
But like I have,
it was a good source of second income for someone who wanted flexibility. Yeah.
right, exactly. And I think that that's maybe gone. And that, I don't know if that's a good or a bad thing. I don't know. I don't know, but I will say this as a parting shot, because I think we beat this pretty good, but as a parting shot here, we should post this because if you did sell a home, I believe back to 2022, that isn't it 2 years or 4 years?
I
it's
think I
2 years.
saw it go back. I maybe that may still not fully be determined. I think it goes back even further, if I'm not mistaken.
Yeah, it might be state by state because
It could be. Yeah.
each state is taking on this as a separate lawsuit. But if you're
I saw a
credit
good,
unions,
C-
you
I got, I
probably
saw a
should.
good, there's a good CNN story we'll post a link to as well as the one that you're mentioning.
Yeah, I think that if you're a credit union, you've got people who are way smarter than Glenn and I about this. You should drag them in your office and find out what's up.
This is
And
just, yeah,
then,
get it on the radar because it's
and we'd love to
going
hear
have
from
an
you.
impact. And given that
You know,
mortgages are pretty darn important.
yeah, well, and they are definitely, I think, in the credit union industry, a sign of what we'll call a engaged member, which is very hard to do. That's one of the biggest problems that the credit union industry has, is that you have sort of that same 80-20 rule you were mentioning, where 20% of the members have their mortgage there, they have a car loan, they have, they're doing their primary banking there. And then there's another 80% that are members, but maybe just taking advantage of, a good rate on the CD, or maybe just has a car because of an indirect program. And so that makes, in my mind, the mortgage members much, much more important, because they are truly, the engaged members in that. And then the other thing is, it's a major part of your portfolio. And what does this mean for people who don't keep the paper? They sell the paper for servicing. Does that change things for them because there's not as much in there? What's Fannie Mae, Freddie Mac? This is all, I don't know. It just suddenly happened for me.
All these long-standing assumptions are about to be altered, and that's the
Right.
bottom line. You got to be thinking about it.
Yeah. And that's what I was throwing out there. So we would love to hear from you. If we're off base, come yell at us, because neither of us are mortgage experts, but
It's been 29 years since I bought a house or sold a house. So yeah.
Yeah, but I think we both have a good sense of what's going to impact our customers, our engaged, our credit unions, business. And right away, you saw the same thing I did. This is going to have an impact, and maybe we're not sure what yet, but we want to bring it to people's attention because I think it could suddenly surprise everyone. Kind of like if you were a travel agent.
Yep.
But that did not go real well. That was really fast how quickly they weren't travel agents anymore.
It's funny. This is almost turning into a legal podcast lately. We got this topic around real estate. We had the Visa MasterCard settlement that popped. You got the CFPB going after late fees. You got Capital One Discover and the challenges whether that's going to be allowed to close. You've got the new legislation around the Artificial Intelligence Act, which there's a great blog. I shouldn't say that. It's not. I wrote the blog, so I shouldn't be saying it's a great blog, but
it is a great blog. It was really well done.
You can do it for me, but
it was well done.
But I basically summarized, because the EU has been a bellwether for a lot of this stuff. They were first to open banking. They were first to GDPR and data privacy. Well, they're first again on this one. So I think you can use that as a guidepost of where we're likely to be going. So we'll post a link to that too.
Yeah, and like I said, we're always curious about what and by the way, I think the other issue, because this has always been true of mortgages, is it's market by market. There's no, it can get hot and up in Maine and be cold as anything down somewhere else where it's just not selling. And that's even more reason, I think, for credit unions to think about collaboration in these processes, because sharing liquidity across the nation when one side's hot and the other isn't, it might be the best way to survive, particularly if there's going to be less rigor or less revenue in a mortgage, even for servicing or other things. So
I'll also just throw out that if you share your thoughts with us, we are more than happy to either attribute them to you or to leave your name out of it if you want to share them confidentially too, because I think just keeping the dialogue going is the important thing.
Right. Absolutely. We just want to hear from you. So, and if you're George, I apologize. If you're my real estate agent, hopefully I did you a fair shake. You've done just a great job for us and our family. So thank you. And that's why like I said, I think it's not that 6%'s gone away. It's that you're going to have to choose. For example, if you're Trump and you're selling Mar-a-Lago because you need the cash, you probably are going to be okay paying a very serious real estate agent who understands all the ins and outs of a giant property like that. But if you're just selling your home, your second home or whatever, maybe you don't need that and you can come down a little on the commission, but that's never been an option before.
Well, you can do all kinds of interesting things. Like, I'm going to pay you a flat fee, plus I'll pay you X% for anything you can get me over this amount.
Yeah, because that was never there before.
Makes sense.
Yeah, because then it just creates the competition in that space. And up until then, it's been squashed. So interesting stuff, interesting times.
Always a pleasure to go over this stuff with you, John.
Yeah, well, and I didn't even get into how AI is going to affect us. I mentioned it a little bit with the whole Indeed and ZipRecruiter and stuff. And the what did I say that was? The AATS.
AI infiltrates everything at some point. Absolutely true.
Well, but I also think it could be a level setter, because what is it good at? It's good at taking, it's good at explaining things that are difficult and going through and finding references.
And another recurring theme, it's really good at setting a foundation and doing the grunt work so that humans can put that touch on the top. And that sounds, again, given the personal aspect, the regional and local aspect of this, let the AI do a whole bunch of the work and then put the cherry on top.
Absolutely. So, all right, Glenn, well, reach out to us and we'll catch up again, I'm sure. And everybody, thanks for listening. My name's John Best, and you can find me at www.big-fintech.com. Also on X, if that's what you want to do, at JB Fintech. I believe my Blue Sky is also at JB Fintech if you're interested. And if you're really just bored and want to email me, you can just email me at jb@big-cu.com. Glenn, where can the peoples find you if they need your...
Just like you, I got the same at 154 Advisors, both on X as well as Blue Sky. And you didn't mention I think that we both have a solid presence, as does the Best Innovation Group on LinkedIn. Which
our LinkedIn is hopping, man.
Yeah,
LinkedIn is hopping, man. You should check out LinkedIn. God knows I'm on there all the time. I keep forgetting about that because I take it for granted. But
yeah, me too.
I love LinkedIn. It's
not the sexy one, but it gets the job done.
It does. It really does. And so hit us up there if you got an idea for a topic, you want to come on the show, or if you just want to berate Glenn, I can set that up. Make it happen for you. Take care, everyone.
Thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.